Hello, welcome to the European Open briefing for Monday, June the 18th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. The main headlines this morning: the US dollar is holding near 7 months highs despite rising trade frictions between the US and China. The euro has turned lower again as we appear to have more political troubles in Europe, with Angela Merkel's coalition looking a bit shaky at the moment. The pound is also off to a weak start. We do have a Bank of England policy meeting coming up later this week. So that's going to be the main focus for sterling. And the Canadian dollar has slid to one-year lows following a slump in oil prices on Friday. Let's get started now with the US dollar. We can see there dollar index holding near those 7 months highs from Friday this morning. If you look at dollar yen, it has eased somewhat from those 3-week highs on Friday, when it came close to hitting the 111 level. We do have a bit of risk off sentiment this morning, following up from Friday when the US announced that it will go ahead with its plans to impose 25% tariffs on up to 50 billion of Chinese imports, covering around 800 products. We saw China immediately retaliating to that. They announced 25% tariffs on US imports, initially up to $34 billion, and at a later date that could potentially go up to an extra 16 billion. Despite that, and although we do have overall risk of sentiment, market reaction has so far been somewhat muted. Many traders still see this as part of Trump's negotiating strategy to force its trading partners to give the US better trade concessions, and also the fact that the way the list of products has been drawn up, the impact on the wider economies, both in China and the US, will likely be rather limited. Let's now move on to gold prices, because despite those escalating trade tensions, we saw a big drop in gold prices on Friday. They in fact plunged to 6-month low, $1,275 an ounce. Earlier in the week, we'd seen gold prices already coming under pressure following that summit between the US president and the North Korean leader, where the two leaders signed a deal to improve security relations between the two countries. But this morning we're seeing gold prices move marginally higher due to those trade tensions, but overall the impact on gold from those trade risks are quite contained. We are seeing bigger moves for the Japanese yen and the Swiss franc, which are also safe havens. Let's now move on to European currencies. We can see that big drop for the euro following the ECB meeting on Thursday, when the ECB, although they did put an end date to their QE program, the ECB also pushed back the timing of the first rate hike by the ECB since the crisis. That's going to now expected to come at the end of summer 2019 at the earliest. So that was seen as fairly dovish, especially when in the same week the Fed said it expects to raise interest rates 2 more times this year, as opposed to 1 more time in their prior projections. But this morning we're seeing the euro turn lower once again. It's falling back towards last Thursday's 2-week low of $1.1541. We're seeing Angela Merkel, Germany's chancellor, struggling to hold her coalition together over an immigration row between her Christian Democratic Unionist Party and the Christian Socialist Union Party, her junior coalition partners, who are unhappy with Merkel's stance over immigration. If that political risks in Germany do intensify. We could see the euro coming under further pressure. Sterling also not off to a good start this week. It fell alongside the euro last week and is now trading close to those lows at around 1.3244 at the moment. So that slide last week came despite a big jump in retail sales numbers for the month of May in the UK. So we've got we've got more votes in UK Parliament coming up over the EU withdrawal bill. Last week, Theresa May managed to secure the backing of a party because she had made concessions to pro-Europeans over the meaningful vote amendment. Once those details were outlined, it looks like the pro-European Conservatives are now not happy with that amendment and may this time round vote against the government's proposals. So we could see the EU withdrawal bill getting Theresa May suffering a defeat on that later this week. We also have a Bank of England policy meeting coming up on Thursday. It's going to be interesting to see how what the Bank of England will say about the growth outlook, given that recent data has been fairly mixed, and with August drawing nearer, it's going to be interesting to see whether or not we're going to get any signals about a rate hike at the next meeting in August. For this month, though, Bank of England will stay on hold, and sterling is looking rather bearish ahead of that. And quickly, let's have a look at the Canadian dollar. We can see the loonie tumbling to a near one-year low 1.3207 against the US dollar, mainly due to falling oil prices. We do have Canadian inflation numbers coming up this week, as well as retail sales. If those surprise on the upside, they could boost the loonie, but for now, things aren't looking too good for the Canadian currency, especially as in addition to falling oil prices, we also have rising trade tensions with the US and the NAFTA future looking uncertain. We do have an OPEC meeting coming up on Friday, where it's expected that major producers will announce higher oil output, although that's not certain, especially as Iran, Iraq, and Venezuela as well are all against supporting an increase in supply. We're seeing WTI drop to 2 months lows, Brent crude falling to 1.5 months lows. We also saw we saw China adding US crude imports to their list of tariffs, so that hurt WTI even harder on Friday, which fell to as low as $63.98 an ounce. Let's take a quick look at today's economic calendar. It's looking fairly quiet, but we do have a number of speeches coming up, including ECB President Mario Draghi at 17:30 GMT. That's it from me. Thank you very much for watching and have a great day.